Go beyond market headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng currently trading close to 1% higher. The Taiwanese index is up 0.5%.
Increases in tariffs this year are likely to push up prices.
Support stands at the 20-day moving average, 24,872. 25,160 on the Nifty is what you have.
Because we chase a set of customers which are fairly distinct from what the bank does.
We get the entire monazite for processing. Then we can go up to 800 ton.
Fairly steady so far in the first 120 minutes of the trading session so far.
For three nations, a new chapter in space takes flight.
The index manages to hold on to this. It will be the second consecutive day of gains for the benchmark indices.
Okay, well, that's the day so far. It's a good session. No hesitation like yesterday. Yesterday, of course, by this time, gains had all but disappeared, and we were up about 1/3%. Right now, just under 1% gain on the Nifty. So looking good. Market breadth quite positive as well. Just the two of us today, and we're going to take you through the last hour coming up. We're coming to you from the CNBC-TV18 Motilal Oswal studios. Nigel, hi.
Well, today's action actually reminds me a little bit like the Indian pace attack yesterday, because we bowled pretty okay. Bumrah was leading. Unfortunately, he couldn't pull back too many wickets. And today you have the Nifty Bank, that's actually the largest component, which is not performing. So we are missing that kind of a little bit of fire that will come in from the Nifty Bank. For the time being, it's underperforming. The next 60 minutes, if the Nifty Bank can get its act together, it can very well take the Nifty even higher from here. And tomorrow being the expiry day, I'll keep an eye out on this index. It underperforms today. It's been the one that's been in form. But let's see whether or not it can propel the Nifty higher from here on.
No, absolutely, Nigel. And, if that joins, the proceedings, I mean, I think that 200-point gain on the Nifty will look much bigger. For now, though, it's just 200 points, which is absolutely fantastic after yesterday's, about near 100 point, under 100 point kind of move. So, the level, of course, is once again, it becomes the last reference point, which is nothing but yesterday's high. 25,318 will be that number, which is where the market got to and then sold off. But much lesser hesitation in that sense. Banks are lagging, as Nigel also pointed out. But just 1/3% under that, actually. Small cap index is doing very well. The Nifty small cap index is up 1.5%. Mid cap's not so much. But the small cap space is buzzing. And sectorally, if you just look at it, IT is the big winner. That index is up 1.5, 1.6. The defense index is down for the second or the third straight session now. Defense index is down a full 2%. So, some food for thought, some discussion points as we go along. Nigel.
Well, that's right. Well, let's get a quick technical call going on the markets. We have Mitesh Thakur, who joins us back on the show. Well, Mitesh, we've put on a good amount of weight today. The breadth of the market is positive. I think that, at around 2,000 stocks gaining, that's the most encouraging sign, I think so. But let's talk about the Nifty first. What are the levels you're looking at from here on? And also the Nifty Bank, a bit of an underperformance, but as long as it's holding above the 20-day MA, you'll pretty much say that the uptrend is intact.
So the uptrend is there, I think what's happening is that we've seen that the range on the Nifty has shifted on the upside without giving a proper jerk, which would possibly suggest some kind of a strong move. So that momentum is missing. I think the indicators are still, not giving you a strong signal of an up move. But yes, the bias, the drift is on the upside, but the jerk which is required, I think, which traders will prefer, is missing. So trading long bias, at least on stock side. On the index side, I think a good idea.
Oopsie. Mitesh, we miss you. All right. I think yesterday as well, unfortunately, it snapped at that point of time itself. But we'll try to get Mitesh back. I'm not sure whether we have him, but we'll wait for Mitesh to come back. Well, from the Nifty itself, let's highlight a couple of big movers. Adani Ports is putting on strength yet again. That was one of the stocks actually that were not participating. I recall at around 2 p.m., that stock was more or less flattish. So that's perked up a little bit. Mahindra & Mahindra finding its form again. That's on its way to making a fresh 52-week high. Just take a look at that. Beautiful looking chart. All through the day, it's been trending up. And the last one I want to pull up is ICICI Bank. That was trading in the red. That's trying to get its act together. It's moved into the green. Well, that's good, right? Because that's a large weight on the index itself. The problem is some of these defense-related names, they have come in for some selling pressure. And in fact, BEL, the stock that's done so well, that's down closer around 3%. That said, we'll get back to Mitesh's call. But for the time being, let's focus on MCX. Brokerage has come out with a note, and they're quite bullish on the prospects of MCX. Vamakshi joins us to tell us what do they find so impressive. Vamakshi, take it away.
Well, Nigel, it's a big thumbs up coming in from UBS on MCX. They've gone ahead, maintained their buy rating, but upped their target price to 10,000 rupees per share. And this is the rationale behind that. First up, they are expecting a very robust Q1 ADV, which is the average daily value. In Q1 so far, they report that the futures ADV saw growth of almost 50% sequentially, largely driven by a sharp rise in bullion. The options premium ADV was also quite healthy at 4,300 crore, an uptick of almost 30% sequentially. This in turn translates to an estimated trading revenue growth of 34 to 35% quarter-on-quarter and a net profit growth of 50% sequentially. In addition to that, they believe that new product launches could support growth both in the near term as well as the medium term. Conservatively, they are expecting electricity derivatives to contribute to 3% for their FY28 revenues, but they do see some upside potential here as well. They're expecting some very good traction in the new silver options as well. And given all of these factors, they've gone ahead and revised their estimates. So they're expecting an earnings CAGR of almost 26% from FY26 to 28. And they've also gone ahead and increased their EPS estimates by 13 to 17% from FY27 to 28 respectively. Now, as far as valuation is concerned, MCX currently trades at 42 times FY27 price to earnings multiple. But they believe that the market currently is not pricing in the growth from new products, the operating leverage, as well as the benefits from higher volume. So overall, they have a positive rating on this counter.
Got it. All right, Vamakshi. Thanks a lot for joining in and giving us that detail. Just take a look at the stock. Wow, what a beautiful move, right? Today, it's up closer on 5.5%. I think the last 1 month or so, that's up closer on 30%. So, that's clearly been the stock to go to. Prakash Diwan joins us on the show. Hi, Prakash. Good afternoon. Good to see you win. MCX has said, why should BSE have all the fun? That was the only one that was running along. So it's playing catch up in that sense. What's your take on this exchange?
Good afternoon, Nigel. So I know, when commodities are doing so well, and especially thanks to today's, rarefied digital era, there's so much of volatility according to the news flow that people who are making, taking trades on the commodity side are probably much more happier than what we've done on the equity side. Be it gold, be it silver, crude, copper. So I think very clearly there is a shift towards there's a shift within the asset classes. There's much more institutional money that's coming in. And very soon you'll probably have products which are driven using MCX contracts as well, maybe some sort of smart alpha strategies on the ETFs and all of that. So my sense is there's definitely more play, and all the overhang that it had in terms of, the issues related to the IT, the kind of money that they were spending on in terms of getting that right, that's probably been sorted and behind us. So people are kind of wanting to look at. But if you really ask me, the valuation, I don't know what UBS has estimated, but our expectation is that on FY27, it's probably trading at higher than 50 times V multiple, which is steep. It's just the environment that's kind of making things look up, but it could very easily come down to 30, 35. So the PE contraction could happen. It's vulnerable to that. But I would definitely believe it's a secular story. You make sense. It makes sense to buy and add on dips, not get so charged up about it, just because the environment, as I said, for exchanges is looking very positive.
Okay, all right. Let's stick to the exchanges theme then. Let's put the spotlight on the latest in the NSE IPO front. Sources say that NSE has filed for settlement with SEBI in the co-location case. Yash joins us to fill us in with all the details that he's picking up. Yash, take it away.
Well, Nigel, this would be the biggest settlement application in the history of Indian capital markets. NSE, according to our sources, has filed for a settlement application with SEBI in the co-location matter. The size of this is slightly upwards of 1380 crore rupees. Now, it is very important for NSE's aspirations to bring out an IPO for this application to get accepted by market regulator SEBI. Now, in a situation where SEBI accepts the settlement application of 1388 crore rupees, in that case, what will happen is that after that, SEBI is likely to give a no objection certificate for which NSE had filed for, which will enable the National Stock Exchange or NSE to go ahead and file for DRHP when it comes to its IPO. Simultaneously, what SEBI will do is to bring an end on the legal matter against NSE. It will move to Supreme Court according to sources. If, of course, all depends on that settlement application getting accepted, to withdraw that case against the National Stock Exchange in the co-location matter. After that, it's going to be a normal process once all of these steps are taken care of for NSE to sort of launch and start the process towards its IPO.
Yash, thank you very much for that. Remember, even after, I mean, if the regulator accepts that settlement offer from NSE, of course, that will get the ball rolling. But then, as Yash pointed out, there are things to be done in the court. And then, it sets the ball rolling. It will still take many months before, we'll actually see a filing with the regulator for the IPO, or actually the IPO happening. So keep that in mind. But this does kind of sort of take them one step closer, but it's a crucial step in that sense. Prakash, any thoughts here? This, of course, you were just talking about the mood looking up for exchanges. Any thoughts on this one, NSE?
Yeah, so, there's been so much of, discussion and chatter going around, but at this 12,500 crores PAT for what the year that's gone by, if you expect some sort of a market cap of 4.5 lakh crores, I don't think that's unreasonable, and that makes the price very attractive, at least, for the IPO itself. But, remember, a lot of people who like the stock own it. A lot of the institutions who had to offload have offloaded it. So I don't know how much of residual activity it will generate. But it is important for the exchange to get listed for various reasons. And you will also have an alternative to the BSE, which trades at 82, 83 times trailing. So, there will be a depth created in the space once this happens. As you rightly said, there's still some time, but hopefully, before March 26 is when you could probably see it getting traded in our markets, and that will be very interesting.
All right, Prakash, I wanted to ask you about a cement name that we would have discussed sometime in the last 13, 14 years, Deccan Cement. The stock is buzzing around. Is there a buyer or is this a bluff? We'll get to know soon. What's your take? Today it's up close to 7-8% on massive volumes.
Yeah.
And obviously I'm trying to work the phone lines and trying to see what I can pick up as well on that front. Valuation-wise, there appears value, but that's always been the case. A lot of these South-based companies, they don't function at optimum utilization levels. What is your take at around 800 rupees? Do you think the best is in the price?
So your guess is as good as mine. In fact, you'd probably be closer to figuring out what Hyderabad people think about this transaction going through. But, you're right. The capacity that it is at is probably where it makes for a very good acquisition candidate. The sellers probably would not mind selling off, getting rid of an asset that's not optimally sized. And as you rightly said, what they've done in the last 2 years, which has helped scale up, at least on the volume side, is improve distribution, which is a smart thing to do, but the capacity still remains underutilized. So anybody who buys will probably be able to pay a premium on it. We've seen this come in the news many times, and probably, a lot of that has started getting factored into the price, Nigel, and because of the small size, float, and all of that, all those things come into picture. But I would buy it on the anticipation that somebody is acquiring it. But given the M&A wave that we have, and especially very few in the South have been eligible, this does make for an interesting, topic. But we'll of course have to wait for it. Organically, also, cement is looking very strong. I spoke about Shree Cement the other day. I still believe there's a lot of value in these larger players, given that they've expanded at lower metrics and now the metrics have improved or started improving. So you'll probably see a lot of that activity happen, but it'll probably be post-monsoon.
Okay, all right. The other one that you had spoken about besides Shree in the past has been Welspun Corp. Now that's done well. It's 20% higher from the price that you spoke about it.
Yeah.
good news in the price or more to come? Every time Mr. Trump talks about drill, baby, drill, they'll require the pipes, right, for transportation. So that's why. But how much of it is in the price? After all, this stock as well has given big returns and it's near its all-time high.
No, I think you're right, Nigel. There is a lot of positive tailwinds that have supported the price and supported the business. But I think given the fact that their focus continues to be in expanding within this space, we spoke about that 700 odd, and it's kind of done exceedingly well. So you could somebody could look at booking profits and waiting for some consolidation to re-enter. But my sense is the business is very clearly secularly trending towards a scale which will be very difficult to replicate. All the other players have been struggling with something or the other, either capacities or geographies. They've got both these things right, and not just the Trump administration. I think overall the way gas is likely to kind of start making waves next year when Qatar produces so much of it, and there'll be a host of recalibration in the underlying markets. They will definitely benefit. So they still have an advantage, and that could continue for at least another year or so.
Okay, as promised, it's exchanges all the way in this segment. IEX is the next one we were focusing on. Bernstein's written a note on it. Vivek is here with more details. Vivek, sorry about the short lunch, but take us through IEX.
Well, a quick one over there. But see, a very interesting note coming in from Bernstein, a very timely one. So what basically Bernstein was, or rather the earlier stance of Bernstein was that of an underperform rating. In fact, they had highlighted a few key issues that on the basis of which they actually had an underperform rating. Number one, they actually expected the spot market to have low volumes. And one of the key reasons was that they actually expected very low volumes coming in from renewable energy power producers to come onto the spot market. They actually expected longer term PPAs as far as the RE developing was concerned. That particular thesis has actually not played out the way they anticipated. In fact, there has been quite a lot of liquidity, sell-side liquidity, that has come in from the renewable energy generators, especially as far as the spot market is concerned. Number two, as far as transaction charges are concerned for the exchanges themselves, in India, they are much higher compared to the rest of the world. And Bernstein earlier believed that this is something that was unsustainable. While they have not clearly changed their stance, they still believe that this is one key risk to watch out for. But so far, it has not played out the way they expected, which has also made them change their stance as far as the stock rating itself is concerned. And thirdly, they continue to have a 50-50 view as far as market coupling is concerned. Remember, market coupling continues to remain the biggest risk. And at this point of time, there is no clarity, number one, if market coupling will be implemented, and number two, when it will be implemented, if at all it is implemented. So overall, on the back of the fact that RE volumes are now on the spot market, they've gone ahead and upgraded their rating. Timely upgrade given the fact that the stock has seen a significantly steep correction from recent highs.
Okay, Vivek, thank you very much for that. Prakash, just one more exchange your way. IEX, any thoughts?
I think the market coupling decision is still some time away, and you'll keep seeing this vaccine win kind of approach. You buy when there is bad news for the stock, and you kind of trade on it if you want. But I think from a long-term perspective, at lower valuations, you could kind of live with it. But there's nothing very spectacular which could have. What's going to change, Prashant, is not exchanges on the power side, but it's actually transmission. And there's a lot of work that needs to be done in that. And certainly the way you saw this whole bull run in transformers and allied equipment, you'll probably see a repeat of that, given that producers are going absolutely hammer and tongs on the generation side. So I would rather look at some more secular trends which last for 3, 4, 5 years, rather than just an exchange which could get vulnerable to any kind of a new addition of a newer player coming in. It could be any of the larger players who decide to throw their hat in the ring and say, okay, we are also going to get into power futures. So there could be a lot of risk attached to it. I'm not very positive on this one.
Okay, all right. We'll leave it there. Prakash, thank you very much for joining us. Good conversation, as always. We'll take a break. We are back with Aditya Sood from InCred Asset Management on the other side. Stay tuned. Okay, welcome back. We've got the market, which of course is doing very, very well. And we've got 25,230, 180 odd points gain. Aditya Sood is with us, fund manager at InCred Asset Management. Aditya, always a pleasure to have you on the program back in Closing Bell. And we've discussed a bunch of things that you own and have liked in the market. So I want to just start with a broader sort of question to you in terms of what you've been doing since the last we spoke, Aditya. Anything you've added, anything you've sold, any action at all?
So I think so the context of the market has completely taken a U-turn, essentially because if you think about markets today, we have not seen risk-free rate coming down or collapsing. The second point is that the risk premia of India within the emerging markets obviously has collapsed, and that is getting reflected in the bond yield differential between India and US. The third point is that, money is moving out of US. Now, if you look at markets, YTD, the best performing markets are in Europe, possibly. We all know what is happening with the Tel Aviv Stock Exchange also. The market itself is up, 30% YTD. So our belief is that, this is a perfect recipe for PE multiple expansion going forward. And it is going to be only a function of, how earnings growth gets delivered. Last 7-8 quarters, we have seen a lot of disappointment, particularly in terms of, earnings getting cut in mid and small caps versus large caps. I think so we are very close to that cycle playing out. So two-pronged approach as far as we are concerned, we are looking at, stocks which possibly have corrected by 30, 40, 50% from peak prices. Not necessarily new ones. The stocks that we already own, for example, Tejas has corrected by close to 50% from the recent high that they made. Newled had corrected, very, very sharply. So did, Indraprastha Medical close to, sort of a 30% knock in each of these names. These are our top holdings essentially. So that is one focus area in terms of, sizing these companies well. The second focus area is that, wherever we get earnings growth and multiple year of visibility, I think so Intellect Design Arena, the stock has obviously done well. So we have added as the stock was doing well. Our belief is that going forward, the AI initiative can take this company, to a different level. We have seen breakout in terms of, margin trajectory from 21% to 26% very recently for this company. So our belief is that, it is more going to be a market wherein concentrated portfolios do well. The context of the market has completely changed because from 2001 to 24, we saw 25% earnings growth. Going forward, earnings growth itself is going to be very, very tepid. So if you can construct a portfolio wherein earnings growth is 18 to 20%, and this is what we have precisely done with very minimal risk to earnings, which is 2x of the market earning growth at a reasonable valuation. I think so we'll be better off in terms of returns going forward.
All right. Hi, Aditya. Good afternoon and good to see you, Ben. What about Religare Enterprises? That's another one that you'll have, I think, close to 4.5% weight. That's the turnaround story. You have a new promoter that's coming in there. Lots of those litigation issues have gone behind. What is the call on the stock from here on? Is it an add at current levels as well? Because I think at its high, it was $280 to $90. Now it's around $220.
So I think so corporate change events, take a lot of time to play out. We have not seen an appointment of a CEO till now. I think so that is one trigger. Care getting listed at some point in time, Care Health getting listed is another trigger. I think so there is a lot of optionality in terms of the broking business that they already have, in the sense that they at some point in time can do wealth management. Religare, by the way, used to have a wealth management, very successful wealth management practice with Macquarie at some point in time. So our view is that, there is very, very little or minimal downside essentially in this name because Care gets traded in the unlisted market. They own 63% of Care. And at some point in time, care would require capital. So our view is that, there are enough catalysts which are around the corner in this name.
That offer is done now, or that open offer is on, Aditya? I lost track. The Burman's offer.
Yeah, so that is done.
That is all done. Okay. Basically, it's back at those levels now, right? I mean, I think 230, 240 was the offer price. It's come off now. So to about 223 or so. I think another one we've discussed, I think last time also, was Tejas Networks under 700, Aditya. This kind of is also a business which feeds into a lot of other industries which are doing well, and all of them. Is this a function of how well it's done in the past, which is leading to a bit of an issue here? So time just correcting?
I think so. It is more of a order visibility issue at this juncture. But our take on the company is that, last year they have done $80 million in terms of R&D spend. Just think about it. How many companies have got this capability of doing a R&D spend, which is purely focused on R&D in terms of, $80 million number? It is more like a $360 million number globally, because in India, our R&D is like 1/4 of the global cost. So that is point number one. Point number two is that, we believe that the NEC tie-up for them is a game changer. In the BSNL contract of, these 1 lakh towers, which has now been extended to 1,18,000 towers, possibly, there is another talk that, possibly it could be, extended to 2 lakh towers because it has been a very, very successful rollout and BSNL is now profitable. We have seen, 260 and 250 crores of PAT flowing through BSNL. So for 2 quarters in a row, they have been profitable. So that is one opportunity. Our view is that this NEC partnership is a two-way partnership. They would be paying a $60 million royalty to NEC of Japan, but more importantly, the go-to-market completely changes in the sense that the core network of NEC is being used by Docomo in Japan, which has got 22 million subscribers. So if you look at, going forward, Tejas can supply the RAN to NEC customers in Europe, in Southeast Asia, in Japan. So our view is that, the TAM is expanding at a very, very rapid pace. The only visibility that the market requires here is order inflow. And I think so, just think about it, that a company, which was doing 550 crore of top line is now a 9,000 crore revenue company. The kind of bandwidth that it takes, to transform this company meaningfully. If I look at the TAM of the other players in this industry, Huawei is a $120 billion telecom networking equipment giant, and Ericsson and Nokia combined itself is like a $60 billion number. So if Tejas, sort of has to have or even target a 3-5% global market share over the next 3, 5, 10 years, they would have to scale up very, very fast. And that is why they are very aggressively, spending into R&D.
Okay, all right. Interesting times for the stock, Aditya, because the others have got that BharatNet orders. We've been hearing, I think, Sterlite and Polycab, I guess. So their time will be due is what you believe. Is that correct?
The system integrators, Tejas, safe to assume that Tejas has tied up with, enough and more system integrators. So it is only a question of time wherein they get the BharatNet order. BharatNet obviously is going to be a 6,000 to 8,000 crore opportunity. It is very well known. BSNL is an added-on opportunity, which is equivalent to 7,500, even if I have to extrapolate 1 lakh towers going to 2 lakh towers. And then there is an element of, BSNL also rolling out 5G in due course in 2-3 year period. And then there is a railway coverage opportunity of 1,000 crore. Now, if you do the maths, everything put together is a 16 to 20,000 crore opportunity for Tejas. The good thing is that there is no competition per se here. So it is pretty much, it is a question of time, when the orders flow in and when they are in a position to execute. But what they have demonstrated clearly is that they were supposed to be executing this in FY26 to 27, the 1 lakh initial towers for BSNL. They have clearly executed, ahead of time.
Okay. All right. Great. Thanks a lot, Aditya, for joining in. We'll keep an eye out on some of these stocks. Some of them brave calls out there. You're seeing some of these stocks have come off the top, but actually, according to Aditya, they're providing good entry opportunities as well. Intellect Design, we discussed. Tejas Networks, and I think Indraprastha Medical, that was the other one we spoke about. Well, for the time being, we'll slip into a short break. On the other side, Nimesh is waiting for us. He's going to tell us what dealing rooms are picking up. Don't go anywhere. Welcome back. As promised, we're getting straight to our favorite segment, D Street Chatter. Nimesh joins us to tell us what's he picking up first in terms of market construct as well as flows. Hey, Nimesh, good afternoon.
Hi, Nigel. Afternoon. So a good day for the markets at days high, virtually at days high, and that's backed by institutional buying as well. So I understand there could be a decent buy number from the institutions today. In fact, there is a small MOC basket buying as well at a leading FI desk. Largely the MSCI stock is what I understand. So numbers could look much better from an FI perspective. But the bigger rally has come in the broader markets today. The mid cap, the small cap index, and the micro cap index is up 1.5%. And there are a lot of individual stocks which are buzzing and have gained very smartly in today's market. So clearly the focus is shifting towards the small and the micro cap stocks in today's market. I guess we'll see the last leg of PE, the promoter stake sale, in the next couple of days from here on, because the the closure of window will start from July. So before that, you will see a lot of block deals and a lot of fundraising happening in the next 4-5 days from here on. But clearly, the focus seems to be towards the broader markets, and within that, the small and the micro caps are buzzing in trade today.
Nimish, in terms of individual names, what's on your radar?
So the first stock is Welspun Living. In fact, I'll talk about both Welspun Living as well as Star Health. Both saw block deals, and then there is a bit of a recovery as well in today's market. For Welspun Living, I understand there's a clean out trade from an FI, and hence a big up move on that stock. Even in Star Health, I understand it's between the FIs to FIs. So the large individual investor has not sold out in Star Health. That's the feedback. So that's the first set of stocks. Second, as I said, there's going to be a slew of block deals until the end of this month. So a lot of names to talk about there. Couple of names which are under pressure today: PB Fintech as well as Angel One. Both are expected to see block deals, and looks like the promoter entity could be selling in both those names. So that's the reason why both stocks are under pressure today. Second stock is Taj GVK. Now this is going to be quite interesting. The stock has been consolidating, but I understand there could be a very large block deal in Taj GVK very soon. The strategic investor is the likely seller, is what I understand, in Taj GVK. So that's something to track there. The third, the new listing which got listed yesterday, that is Aditya Birla Lifestyle Brands. That's picked up in today's market. The volumes are higher on the higher side. I understand some HNIs are buyers as well. But even there, the FDI investor could be a seller, and if they has to sell, has to come before the end of this month. So again, a large block expected there as well. So these are the part of block deals. The third stock on my list is Jubilant Pharmova. After the block, you saw some bit of correction there, but now the rally has picked up 5% up in today's market, and that's backed by FI buying. So expect high delivery volumes there. And the last, and this is interesting, both Interglobe as well as SpiceJet. While it's a correlation to crude and should ideally go up, both are seeing block offers from large institutions. So looks like there is a bit of profit booking now at these levels, especially in Interglobe after the recent rally. And for Interglobe, there is a risk of a block as well, which is impending. So that explains a bit of softness in Interglobe in today's market.
Interesting list of names. Nimish, on Samman Capital, it's up big time. Anything you've heard?
So there are a couple of things which needs to watch out for. The one, of course, is today's delivery data. I understand there is a block bid at a leading FI desk, so need to see whether that executed in terms of delivery buying. And also for Samman Capital, the next big trigger would be, my sense is that there's going to be a senior level appointment in Samman Capital. That, to my mind, is still some time away. Looks like it should happen in the month of August. So that's going to be the next big trigger as far as Samman Capital is concerned. So maybe today's move looks like it's on back of some bit of bid offers from large institutions.
This is, for our viewers, the erstwhile Indiabulls Housing.
Indiabulls Housing, correct. So again, we all know that Gagan has been at the head for a very long time. He's going to continue, but maybe there are a couple of more senior appointments which are likely there.
Okay. All right. We'll keep an eye out on this one as well. Thanks very much, Nimish, for that. So that's the list of stocks. Flashes at the bottom of the screen. Cabinet has approved almost near 6,000 crore allocation for something in Jharkhand. I missed the last bit. 3,600 crores for extension of Pune Metro Rail. So lots of decisions coming in from the cabinet meeting. And we'll come back to this in a bit. Mitesh is with us with what to buy today or buy or sell today for a reverse trade tomorrow. Mitesh, what do you have?
Nykaa, I think, is a BTST and Tata Chemicals. So Nykaa is a BTST with a stop just below levels of 202.5 and look for a target of 208 for tomorrow. And Tata Chemicals, the other one. That's a BTST. It's closing at the day's high. So BTST here with a stop at about 932 for targets of 950.
Got it. Okay. All right. Thanks a lot for that, Mitesh. Well, let's get into Upasana. Phillip Capital has come out with a note highlighting some risk for Dixon Tech, and that's weighing on the stock. Upasana joins in to detail that note. Upasana.
Well, Phillip Capital has highlighted some of the growth concerns on this stock. Now, it has given a sell call. It has maintained this call rather with a target price of 9,085 per share. Now, the brokerage says that the Dixon's largest client, that is Motorola, has begun outsourcing volumes to Carbon. Now, Dixon was Motorola's sole manufacturing partner last year, but this trend has changed this year onwards, in which Motorola is routing some of the volumes to Carbon in current year 25. Now, talking about March and Feb of this year, the outsourcing was minimal, but April and May months have seen nearly 25% of Motorola's monthly volume, which were outsourced to Carbon. Now, Brokerage feels that this initial estimate suggests that this figure can rise as high as 35% by June. Even Longcheer, which is the Dixon's second largest client, may also outsource incremental volumes to Carbon, is what they have indicated. Looking at the past trends, Dixon's volumes from Longcheer have gained, but May CY25 onwards, the Longcheer began outsourcing a small chunk, that is nearly about 2%, to Carbon as well. Now, Brokerage believes that this could also scale up quickly in the coming months, hence highlighting some of the growth concerns. So on the back of this, the Brokerage has reduced its FY27 estimates, revenue estimates by 4%, EBITDA by 6%, and PAT by 9% to account for higher competition in the mobile phone assembly space. So overall, we can see the stock reeling lower in trade today on the back of this.
All right. Thank you very much for that. So keep an eye out on some of these cues. Dixon and Focus 2% lower right now. Now, earlier in the day, I spoke with Benjamin Heelan of Bank of America Securities. Remember that big NATO summit is underway where countries as part of the security alliance are deciding to increase defense spending substantially. We've spoken with defense companies here in India quite a bit over the last many months now. And many have said and focused on and told us that maybe Europe is a potential market and a large growing market. Listen in to Benjamin with some of his thoughts. And if you want to get there quickly, you're going to not sort of make all of it at home. You're going to be buying it from elsewhere as well. US defense contractors, we spoke about some of this last time. Companies out of Korea, for example, I've seen one or two reports how they want to make in Europe. I mean, they're setting up manufacturing within some of these countries, Korea Aerospace, Hanwha, etc. I mean, just take us through your latest thoughts on how your thinking has evolved on this.
Yeah, look, I think that there is a very, very strong buy EU mandate from the European governments, right? The European governments want to make sure that we are investing in and building up the European defense industrial base. And obviously there is a multiplier effect because you're putting capex and employing people in the region. And so, yes, I think what we've seen over the last couple of months, we've seen a lot of JVs announced between US companies and European companies. So there was a Lockheed Rheinmetall joint venture. There was an Anduril Rheinmetall joint venture. And obviously there are a lot of companies looking at putting capex and actually building businesses in collaboration with certain countries in areas like Poland. So you mentioned a couple of them there. So I think that how are you going to be able to gain access to the EU defense industrial base and the defense market here? You need to put money and investment in the region. And I think if you do that, you can be seen as a local player because you're producing stuff locally. And that's what will give you access to the European defense market over the medium term. And I think that theme is going to be very real for India. It's going to be very real for Japan. It's going to be very real for Australia, countries that are looking at building their own defense industrial bases as well. This idea of sovereignty around the defense industrial base, I think is just going to be an extremely core principle of what governments are looking to achieve over the next decade.
Okay, well, that's the view coming in on European defense. Essentially, the point Benjamin is making is, there is strong mandates for all these European countries to buy local. So essentially, foreign companies, if they want to sell to Europe and European countries, they've got to make there. So interesting conversation. Remember to tune into the all-new CNBC-TV18 Prime, and essentially an effort to bring you insights from policymakers, business leaders, and economists. And of course, decoding global shifts and their impact on Indian businesses. Well, we've got all new lineup of programming at 12 noon every day. There is the Global Reset, which airs at 1 o'clock. You've got to focus on commodities, currencies, crypto. We're calling it the Big C. And you've got Global Lens at 8:30 in the evening. Okay, back to the here and now as far as market action is concerned. Bharti, of course, has hit a new high. Earlier today, we spoke with Balaji Subramanian, Vice President at IIFL Capital, and I asked him whether Bharti as a stock continues to do well from here. Here are his thoughts.
If you look at Bharti Airtel, they are at around 245 as of last quarter, 4Q FY25. I would expect them to almost hit 300 rupees by the end of FY27. Which includes, the next round of tariff increase and some, organic upgrading from 2G to 4G data consumption increase, etc., that keeps happening on a regular basis.
Well, let's get in Mayuresh Joshi. Hi, Mayuresh. Good afternoon. What's your take? People were wondering whether Vodafone will survive, not survive. What is the story out there? In the meanwhile, last 3 years, Bharti has gone up almost 3x. Would you believe now it's time to take that punt and buy Vodafone idea, or just stay? You want to play Telecom, stick to Reliance, stick to Bharti Airtel?
Afternoon, Nigel. I think we don't like taking punts on markets with India. More or less stay with the short stories where earnings growth probably remains strong. And therefore, I think Bharti as a story is a structural story in play. Obviously, I think the ARPU increases that are expected to happen over the next few quarters will very well continue. And with ARPU increases, you're obviously going to see a lot more happen in terms of both the revenue market share, the subscriber market share being stable. And therefore, I think the kind of numbers that will keep on coming in for Bharti Airtel will be relatively better. The second aspect, obviously, is in terms of their core growth dynamics in key markets itself. And therefore, I think with a lot of capex already having been done, with ARPU increases, cash flows probably improving, the net debt to EBITDA levels are expected to come lower as well, which creates the cash flow support that the balance sheet probably needs. So in our opinion, again, I think it's a structural story. I think the stock has obviously moved significantly higher. But again, I think both Bharti Airtel and Bharti Hexacom, the rating, rankings, institutional holding, look very solid, and there looks earning stability in place over the next few quarters in terms of visibility. So I think we continue holding both these stocks, both in our local and global portfolios.
Okay, all right. Mayuresh, I wanted your view on KNR Constructions. The market cap that I saw is, I think, close to around 6,000 crores. The order win is more than 4,000 crores. May not be the ideal way to look at it, but it's telling you the kind of size of the order that they won, and that's why KNR Constructions is now up 10%. Any view on this name or something you like from this space?
So it's a very interesting stock, Nigel. And again, I think that, if I'm not mistaken, there were some regulatory concerns which had cropped up for this one in the past few months. But generally, I think if you look at the order book, I think well diversified, both in terms of EPC, roads, irrigation as well. And therefore, I think if you probably have a construct in terms of road companies, the kind of IRRs that they can deliver going forward, I think that can be stellar. At the same time, if you're looking from a balance sheet perspective for KNR, I think very, very clean balance sheet, almost net debt zero on a net basis. ROEs have shown significant amount of improvement. EBITDA margins have shown significant amount of stability. And I think a large part of the work orders, if they're able to complete before time, I think the kind of completion bonuses that accrue onto the balance sheet are significant as well. So from a balance sheet perspective, healthy balance sheet, it's obviously corrected significantly, as have a lot of other road companies as well, including the likes of PNC Infratech as an example. But I think both these stocks, KNR and PNC Infratech, have all the tailwinds that are there behind them. Good order wins, better margin, and a very, very strong balance sheet.
No, absolutely. 200 points now, 25,243 is where we are now trading at. Lots of single stocks which are moving, which we've not highlighted. Maybe I can use a minute or so to highlight some of them, right? So MCX, Saman Capital, etc. we've all highlighted. Kirloskar Brothers is up 18%. So that's a big move coming through on Kirloskar Brothers. We've got Balaji Amines, which is up 13%. I mean, that's a sharp move which has come through here on Balaji. Endurance is up 9%. These have all got very, very large volumes, by the way. India Mart is up 6.5%. There was, of course, that brokerage call on India Mart. RK Forgings is back up about 5%. The recent high was about 675, 678 now. Bellrise recent listing 6% on this one. Fino Payment Bank is up 7%. So that should come up as well. Alkyl Amine is the other one, 6.5% on Alkyl. And boy, it's really moved last few sessions now. I mean, I think 4 days back was at about 1900. Stocks at about 2350. So that's a super strong move coming through very, very quickly on this one. EID Parry is another one. 1064, 10% higher on EID Parry. Parag Milk is up about 7.5%. So many names, I can go down, but there's enough volume, by the way. It's not as if Ather is another one. Recent listing, 7% on Ather, 341. Solara is up about 17%. It's coming up with large volumes as well. Style Bazaar has got about 11% on it. Nesco is up 7%. Uptown is up about 6% or so. And Ixigo, which is the travel aggregator, 7% higher, 177. No dearth. Barbecue, which is a huge underperformer, 5% on Barbecue right now. So it's really, very, very vibrant screen out there. 3:1 is the advances to decline ratio. I mean, if you look at what's happening on the NSE. We'll continue the conversation with Mayuresh and touch upon some of these names, but let's take a quick commercial break here. Just leaving you with this market opinion from Sandeep Bhatia, Managing Director, Head of Indian Equities at Macquarie Capital. Hear him out. Come back with Mayuresh.
There's going to be a slow grind up. On the whole, I think we are not in a zone where we will see a major downfall of over 10%. So let's say between 15 to 20%. I'm not in that camp, but it will be a slow grind up. There are positive factors which are helping the market. The only negative I can see is the amount of supply and the quality of supply.
Welcome back. You're tuned into Closing Bell. Well, Mayuresh Joshi is still waiting by. Mayuresh, I wanted your view on Dixon Technologies. Yes, longer-term story is good. There's going to be, they have fairly good return ratios. The problem is on the margins. And just a couple of sessions ago, the promoter entity went and reduced some stake a couple of percentage points. Now there's also some diversification from one of their key customers. Stock is down 2.5%. Buying opportunity, or it's way too expensive for your liking?
No, I think it is expensive in the first place, Nigel. And I think we will wait for further declines on this stock. Obviously, I think the product innovations that Dixon is probably bringing about will start accruing results over the next few quarters. But we'd like to ideally see in real earnest how the ODM is probably shaping up. Because as we all know, ODM is where I think the margin improvement will take place on the balance sheet. And therefore, as the proportionality of ODM starts increasing in terms of the product mix and in terms of the revenue share as well, that is where the margin expansion will come from. And as margin expansion starts coming through, I think that will translate into better numbers on the bottom line and better EPS growth. It's not that they are not having stable and strong earnings growth as we speak, but I think for more re-rating on that stock to happen, or for a more structural re-rating, I think that ODM component has to come through. So I think expensive, above pivot levels as we see it, the price action is probably correcting as we see it as well. And therefore, I think we will wait and watch for better levels to probably get.
Mayuresh, any thoughts on these amine stocks, Balaji, Alkyl?
No, so to a large extent, Prashant, I think the moves have been stellar over the past few days. I think they're moving in terms of expectations that will probably come through. And the expectation largely, Prashant, is that DGTR is expected to approve anti-dumping for acetonitrile. Now, with that probably happens, acetonitrile prices, which have remained muted for a large part of the prevailing few quarters at around 140, 150 rupees on the kilo, because of heavy dumping from Chinese manufacturers, I think that might create a fillip in terms of all these stocks. Again, I think because of Chinese dumping, a lot of products, whether it's methylamine or ethylamine, which is a large part of alkyl, certain elements of Balaji as well, because of their expansion, has come under pressure because of pricing and demand supply issues. So I think it's all, in my opinion, of expectations of their anti-dumping on acetone.
Okay, all right. Well, Mayuresh, request you to stay with us. For the time being, I think we'll just wind down on today's market action. Yesterday, we did slip from around that 25,250 odd mark. Today, we end closer to that mark. So the Nifty goes home with a gain of close to around 200 points. The problem was the star batsman. The Nifty Bank didn't participate today. That was up only around 0.2%. In point terms, was up around 130 points. What did well? Titan, that was back in the reckoning, was up 3.5%. Grasim was up close to 2%, Mahindra & Mahindra up close to 2%, and Infosys, that's the big one in there that did bulk of the weightlifting in today's trading session. On the flip side, you had BEL that came in for profit-taking. Kotak Mahindra Bank as well did see some selling in today's trading session. What else did well? Well, from the broader markets, there were plenty of winners. And you had a couple of brokerage calls that actually tickled stocks. So you had India Mart that was up, post Nuvama doing a U-turn on that name. So that stock was up and about. The other one that did very, very well in today's session was MCX, because UBS went ahead and hiked the target price out there. However, Phillip Capital was a little bit cautious on Dixon, and that's why that stock was down close to 2.5% by the time we wound up. From the broader markets, smaller names that did well, you had Sammaan Capital was up 15%, Jai Balaji was up close to around 15%, you had MTNL that was up close to around 10%, and Wellspun Living, as Nimesh said, there was a large trade out there. Stock goes home with solid gains today. What else, Prashant?
No, I think really a day of mid and small caps and so much action and so much activity. You can easily rattle off 10, 15 names with outsized volumes that you had today. And I think you mentioned a few of them. I think on the downside, I'll just take a quick bit because I think it's easier to count the gainers. Defense as a pack really took a breather for, I think, the second or the third day running. Second day, actually. Garden Reach, Mazgaon, that's the index itself, which was down to Garden Reach, Mazgaon, Data Patterns. You had, Paras Defense, Idea Forge. So after, again, these have gone up order of magnitudes of many times. So in that sense, in the broader context, larger context, These are small corrections that we really have seen. Lots to talk about, and that conversation on markets will continue on Markets Forward, which comes up in just a bit from now from us on the Closing Bell team. Thank you very much for staying with us. But Markets Forward in just a bit.